Have you ever heard that life insurance is for more than just when you're dead? Well, it's true. Life insurance, specifically permanent life insurance, permanent whole life insurance, can be a useful financial tool while you're alive because it offers more than just a payment after death. Maybe you've heard of overfunding, high cash value, max funding, the and asset, infinite banking, IBC. The list kind of goes on, but maybe you haven't heard of any of this before. And I'm going to do my best to concisely explain what it is, what it isn't, why some people put money there, and who should more often than not kind of, stay away from it. Greetings, everyone. Thanks for tuning in. My name is Demetrius. Let's hop into it. Now, I figure some of you just want to have a definition and move on with the rest of your life. So here it is. Overfunded or high cash value life insurance, you'll hear me use both of those terms synonymously, is a safe place to store money for long-term tax-free growth and access with a death benefit. Put simply, it's a savings account with a death benefit. And you're never going to hear me saying crazy statements like it's the only place you should store your money, it should replace your bank account because banks are evil, it's going to give you a better rate of return than the stock market, or it's something that every single person under the sun should have. Like, you'll never catch me saying any goofy things like that. Now, before we go too much further, I want to let you in on something that's very important. I will intentionally not get into every single nuance of whole life insurance in this one video. Now, as I go throughout, if you're genuinely curious and you want to understand the nuances, how this can apply to you, I would just encourage you to stay tuned, kind of stick around for the weeks and months to come, because I'll be coming out with more videos. So just consider subscribing if high cash value life insurance is something that you're curious to learn more about. Now, back to the main discussion. Here's how I see it. High cash value life insurance is one of the options that you have for the safety component in your portfolio. The others being things like bonds, CDs, savings accounts, even high yield savings accounts. And I'm really biased when I say this next statement, admittedly, but I actually believe that life insurance, when set up and used properly, is the best option because it's a multifaceted tool. Now, some may even call it a Swiss Army knife of financial products because of a myriad of reasons. I'll go over a few of them. Number one, it gives you incredible stability. Number two, you'll experience growth for your entire lifetime. In other words, it's not going to stop growing or stop having as much of a capacity for growth just because you hit retirement. Number three, there's little to no maintenance for it to do what it's supposed to do, or there's not going to be all this manual shifting of money just for it to do what it's supposed to do. Number four, it's time tested, right? The companies that are best to work with are those that have been around for a long time. They've been through the worst economic times in the last 200 years or so, and they've come out unscathed, right? And in fact, they've continued to be profitable. Number five, it's backed by actuarial science. And number six, it's simple and it's very predictable, right? You'll have a pretty solid understanding and idea of how much cash you'll have, or just cash value that you'll have, and the amount of legacy or death benefit that you'll leave to your family when you die. Now, earlier I alluded to the fact that whole life insurance, just like every other financial tool, is not for everyone. And I'm going to share just 4 different types of people who it may not be the best for. The first person it may not be the best for is someone who has literally no regard for safety and stability in their portfolio. In that case, maybe whole life insurance isn't for you at this time. And I say at this time on purpose because people's philosophies about money, they change over time. The second type of person would be someone who perhaps values rate of return over the results that they'll receive in a particular product. And I'll show you in future videos how you can literally have less money in life insurance and yes, a lower rate of return, and yet produce a higher amount of future cash flow that's more predictable because you have actuarial science on your side. The third type of person may be those of you who have no regard for legacy at all. And although you would end up having more money in life insurance than maybe other safe assets out there, it probably doesn't matter to you. It just doesn't move the needle. It means absolutely nothing to you. And I would say, that's okay. And number four, and maybe this one's obvious, maybe it's not, but if you don't have enough money, or if there's not enough time on your side to really get these things humming and really working in your favor, it's probably not going to be a good fit for you as well. And I guess the reason I felt the need to say that part right there was because some people at times, they see things that they really like, they really want that thing, but ultimately could end up causing more harm than good because of maybe the specific life circumstance that they're in at the present time. In other words, the timing just wasn't right. Now, I hope this at least scratched the surface for what whole life insurance is, what it isn't, who it's for, who it's not for, right? And this channel exists to educate, and I think some of the best learning happens where you can get feedback on the questions that you have. And since you're still here, let's connect in the comments, right? You and I can literally have a dialogue, which I think would result in more educational material being put out that you specifically find beneficial. So again, if whole life insurance is something that you're curious to learn more about, or you just enjoyed this video, consider subscribing. That goes a long way for the YouTube algorithm, and it minimizes the chances of you missing any new videos in the future. Because again, I may or may not have a set schedule of when these videos are going to be coming out. I just put them out when they're done. So anyways, thanks for watching. I'll see you next time.